Thanks for loading up this short technical analysis video. I'm calling it Profit from Fear, and it's to do with the latest AVACTA chart. There's some interesting developments there. I hope you find it interesting and useful. So let's get straight to it. This is the AVACTA chart, and this is my reading of the pattern that is emerging on the chart. The way I see it is that the move from 88p or 88p thereabouts through to 122, that was an entire cycle of 1, 2, 3, 4 with a very extended fourth wave through to 5, and now we're in the midst of some form of correction down to ABC, largely prompted by some speculation by shorters that there is a placing on its way, and I'll come back to that in a few moments with regards to the fundamentals of that. But there is a very clear 1, 2, 3 up to this point, and an ABCDE correction pattern in a triangle format, which is fairly typical for a full wave. The reason I've labeled this an ABCDE, just for those who are interested, is because down here we saw the price drop to 105, and 105 was below this point, and if this point had been labeled as a one wave, so all of this would be 1, then this point would have been below, and that is contrary to the rules for earlier wave. So therefore we've got to recount this in some kind of way so that this 4, if it finishes here, remains above the 1, which would be here, which it does now with this count. So in that case, what we have is we have a impulse, and now we have a correction. Typically corrections, the first bit of the correction, the A wave, is shorter than the second piece, which is the C wave. And the C wave is quite long. It's about 1.5 times to 2 times the A wave, which is about right for an A wave and the C wave. So I'm happy enough that that's about the right level. Interestingly, if we look at the line chart, and we look at the line chart on, instead of a 15-minute level, at a 1-hour level, let's move out a little bit, we can see some more detail here. We can see our ABCDE much more clearly, our 1, 2, 3, 4, 5 more clearly also, and we can see that this wave C is beginning to retrace. More to the point, if we look at our indicators, so for those who have been on the courses, these indicators will be familiar to you. I'm not going to try to explain them, other than you can see this is a form of RSI. It's way below its oversold point. It's turning around. A stochastic indicator, which is momentum, as is the MACD, is turning around. So all of that stuff is good. In many respects, I actually welcome moves like this, because at least we know that we have a completed impulse wave, and so we're close to a completion of a contraction wave or correction wave, in which case the next move has to be upwards, always. And then if we look at the possibilities for that, the interesting thing is that the minimum level, likely as not, is going to be close to historical resistance at 141, and the more likely level is slightly above. So likely as not, what will happen, going back to fundamentals, and let me get rid of these indicators. There we go, and make that full scale. Likely as not, what will happen is that the people who have been saying that there will be some form of raise may well be correct. Interestingly, but just by the way, this grey is the Keltner channel. I've explained that on other videos. We're at the bottom of that Keltner channel. It always bounces back at least to the midpoint. The fundamentals with regards to whether or not there's a AVACTA need a raise are to do with the fact that it needs to accelerate, and probably wants to accelerate phase 1B by having more hospitals. So in which case they may have a raise. Who knows? The question is, for what purpose is a raise, and who is providing the money? If all of that is positive, I've seen many instances where actually raises are seen by the market to be a very positive thing. So I wouldn't be afraid of whatever the shorters are saying. They don't have the same amount of information that all the people on this forum have, and we have a fairly clear pattern emerging where the indicators are showing that the next move, having had a little fun and games, is likely to be upwards. There's a possibility it might go down again to 105, maybe even to 101 to test that level if this 1, 2, 3, 4, 5 is correct. But none of that is anything to be concerned about, at least not for me. Anyhow, What we have here is a impulse, a correction. The correction is probably, looking at our other indicators, likely to be corrected very shortly. Incidentally, this red and green up here shows the balance between buys and sells. When there's more green than when it's showing green, it means there's more buys than sells. That's still looking quite healthy to me. Also, we have a fairly upwards trend up here. You can see an upwards trend, and again, that's positive. So all in all, I'm not too unhappy with the situation. Hope you find that helpful and reassuring, and it's a time to profit from fear. For me, one of the key takeaways of situations like this is that when people try and spare fear and doom, it's always useful to look at the technical analysis, because then you can actually see the real picture in terms of what the market is actually really doing. As you can see in this video, the signals are actually positive, and you can see clearly which part of the cycle we're in. Anyhow, if you want to find out a lot more about technical analysis, check out LTAG.uk. There's also a pro tips video on the homepage. Have a look at that if you've got the time. And I look forward to chatting to you soon. Cheers. Thanks.